Yes, a Rolex watch can be classified as a business expense under certain circumstances. However, it's not a straightforward process, and several conditions must be met to justify this classification. The primary consideration is that the watch must be used primarily for business purposes. This could include scenarios such as wearing the Rolex to impress clients, using it as part of a required business uniform, or needing it for other legitimate business activities. The key is that the watch should not be used solely for personal reasons. It must serve a clear business function. For example, if you work in a high-end financial firm where appearances are crucial and clients expect to see a certain level of sophistication, a Rolex could be considered a reasonable business expense. The watch would be seen as part of your professional image, helping to create trust and establish credibility with clients. In this context, the expense of a Rolex might be justifiable because it aligns with the business's needs and expectations. However, the cost of the Rolex must also be considered reasonable and appropriate for the business. While a luxury watch may be suitable for certain industries, it might not be justifiable for a smaller business or a company in a less image-conscious sector. The expense must match the business context, and an overly extravagant purchase could raise red flags with tax authorities. Proper documentation is also critical when classifying a Rolex as a business expense. The company needs to document the business purpose and usage of the watch clearly. This could involve keeping records of meeting agendas where the watch was worn, client entertainment events, or company policies that require certain dress standards, including the use of luxury accessories like a Rolex. Without this documentation, it may be difficult to prove that the watch was used primarily for business purposes, which is a requirement for the expense to be considered legitimate. In addition to documenting the business use of the watch, the company must account for it correctly in its financial records. A Rolex cannot typically be expensed all at once. Instead, it should be listed as a business asset and depreciated over its useful life. Depreciation allows the company to spread the cost of the watch over several years, which aligns with how long the watch is expected to be used in the business. This approach is standard for high-cost items that provide long-term value to a company. Because the tax implications of writing off a Rolex can be complex, it's crucial to consult with an accountant or tax professional before making the purchase. Tax laws vary by jurisdiction, and a professional can help ensure that the expense complies with all relevant regulations and accounting standards. They can also guide how to document and depreciate the watch properly, minimizing the risk of any issues with tax authorities. In conclusion, while it is possible to write off a Rolex as a business expense, it requires careful consideration and proper documentation. The watch must be used primarily for business purposes, the expense must be appropriate for the business context, and the company must follow proper accounting procedures. By consulting with a tax professional, businesses can ensure that they handle the write-off correctly and in compliance with all relevant tax laws.